really strong 2025, strong start to 2026. Really, since we made the move over to Aretec, the numbers have been phenomenal, which is awesome to see. And I think a lot of that just speaks to we've had more flexibility, just more ability to invest in a way that we feel is in the best interest of clients, is in the best interest of investors, can ultimately better manage the risk of the market, better take advantage of opportunities. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. Right, here we go. It's Friday. We're back. We've got our Associate Vice President, Roman Canal, here joining us. Greg's taking the week off. He's escaped from the polar vortex and snow and went down. He's basking in the sun in the Dominican. He's left Roman and I to hold down the fort here this week, dealing with the markets and politics and geopolitics and all kinds of crazy stuff this week. But anyways, how you doing, Roman? What's going on? What's happening? What's happening today?
I'm doing awesome. It's Friday, and yeah, it's cold out there, but it's my first time on the Realize Your Wealth podcast, so I'm really happy to be here. Step in for Greg while he's away. I heard he's a little bit scared of the cold. That's why he left us here this week. But no, it's all good. Well-deserved break for him, and looking forward to stepping here, filling his big shoes while he's away.
Oh yeah. And for those of you, I'm sure lots of our clients have worked with and are very familiar with Roman, but he's an integral member of our team and works with a lot of our clients and just critical to the operations at Aretec all the way through the whole operation. Really a rising star in the business. So we're excited to have him here. He's taking on a little bit of a new role here, but excited to get into things, and not an easy week to come on because it's just been a crazy week in the markets. Crazy week in terms of the news flow between all this stuff around Greenland and Trump and Davos, the World Economic Forum, Carney fighting back, just crazy news flow. It is actually affecting the markets and creating some volatility. I mean, thankfully, one thing I'd say is our portfolio is holding up really well. Just looking at things this morning, markets are off a little bit this morning, kind of a mixed week, but all our portfolios are bumping up right around all-time highs, which is nice to see. And last week, the video was about us being off to a strong start in 2026. And really all this political stuff, all the uncertainty just helps kind of fuel that and has pushed things a little bit higher here. But looking forward to diving into things this week with you, Roman.
Awesome. No, really looking forward to it as well. And yeah, to your point, lots going on out there, a lot of headlines surfacing. And, most recently out of the World Economic Forum, there were some comments involving Greenland. Thought we could just start there. And could you walk us through what actually happened, why that caught so much attention and what happened there at the World Economic Forum?
Yeah, I mean, look, not an easy one to touch on, but I think it really just started market-wise in earnest over the weekends, and then Monday was a U.S. holiday, so the markets were shut, and you wound up on trying to get my days right here, but on Tuesday had the first real down day in months and months in the markets, where markets were off a couple percent, basically because Trump is trying to take over Greenland or who knows exactly what he's trying to do. Then you had this World Economic Forum in Davos going on with pretty much all the world leaders were there. Greenland was a hot topic. Just obviously this heightened geopolitical risk going on, just shaking the nerves of the market. And then Trump was out there. Carney, the Canadian Prime Minister, was out there too, but gave a speech and kind of backed off the Greenland position. Claims at least to have a framework for a deal to protect the Arctic. We'll we'll see. But markets then responded positively and bounced back. So you had a real turnaround after a nasty day on Monday. You had a real turnaround day or so nasty day Monday, Tuesday, real turnaround on Wednesday, and then Thursday as well was another update. Today's a little bit off, but it's just increasing this uncertainty and this volatility that's happening in markets, which is one of the big themes. Even when we did our outlook for 2026, is all this geopolitical stuff, the Trump theme. It's not going away as we go through 2026. It's probably going to be here at least for the next few years, the next 3 years. So it's something at this point kind of to expect.
Yeah, for sure. There's tons of uncertainty out there when you look at geopolitical risk. You look at different policy changes or potential policy changes, and looking at all this heightened volatility, heightened uncertainty. I mean, what does that mean for markets, or how should investors feel about markets as we move forward here into 2026?
Well, the reality of it, markets have actually been quite strong. So, in spite of all this craziness and chaos, markets have continued to grind higher and push higher. So there's this whole wall of worry, and markets keep moving up against it, which is good and it's positive to see. I would say our portfolio, our strategy, we've been in a lot of the right pockets and areas to really those leadership areas to capitalize and take advantage of things, which has been good. So I mean, gold and precious metals and the whole material space is a good example. Like when we look at things this year, as an example, even just through the first few weeks of 2026, gold and gold equities have been surging. We also have a few more minor complementary positions like uranium and rare earths, base metals. So all this whole commodities complex is absolutely surging. So we've been fortunate in our portfolio at Aretec to be strategically positioned towards that and benefit from that. And there's other areas as well, but we've been in a lot of those right pockets, the right sectors, subsectors, positions, names to actually benefit from what's going on. And I think we've gotten probably our fair share of results from things. But I think for investors, just to know that yes, markets have been strong, they've been resilient against all this craziness, all this chaos. But I would not be surprised. We've said for the last couple of years to continue to expect the unexpected and be ready for anything. And that's just what we've continued to see as a chaotic world, chaotic scene out there. But markets have continued to climb up against that.
Yeah, completely agree. And I think it's just really reiterates how important it is to have a real tactical strategy and a real plan in place for these markets, which are changing faster and faster. With news flow and with geopolitics and with everything going on out there. As it relates to the asset allocation in the portfolio, we always talk about the red light, yellow light, green light positioning, the offense, defense. Where are we positioned now as it relates to just overall market exposure for clients, and how are we seeing things moving forward?
Yeah, so a couple of weeks ago, we actually tilted the allocation up to more on target. So I call it more of a yellow light positioning. I mean, the thing to be mindful of is markets still are probably in that overbought, overextended zone where they've run pretty far, pretty fast over the last several months, which has been good to see. But at this point, we actually have shorter and medium term bullish signals in the market, which has been good, which is also kind of crazy when you're reading the headlines and reading the news. A lot of the feeling and the sentiment we get from clients is, yeah, how can this be given everything that's going on in the world? But what we want to watch and what we do watch is we watch our technical indicators, our relative strength indicators that governs our positioning. And what the markets are telling us is there's still confidence, there's still optimism out of investors, which is pushing things higher, which for us helps make that decision about how to be invested. And I mean, one of the things when it comes to the politics and the geopolitics side of it and Trump, I think if it's any kind of potential relief, I think when you look at what Trump is doing, he pays pretty close attention to the stock market, and he uses it as almost a judge of his popularity. And we've seen this several times that if his positioning or his stance negatively impacts markets, all of a sudden he backs off. And I'm not saying necessarily the reason that he backed off the Greenland thing, but it seems to be a common trend. Like we saw that with tariffs, big time in 2025. That the tariff situation crashed the market in March and April, and give it a week or two, and Trump's reversing his position, and he did that all through the course of the spring and summer, and it's happened with other issues, and then the Greenland situation, it's happened there. Yeah, and I'm not saying that's governing our positioning or anything along those lines. It's just to try to give some rationale and some reason why you get these crazy geopolitical statements. It does impact the market, which is unusual in some respects because it's been a while since we've seen politics impacting the market in this way. But all of a sudden, a position gets reversed, and markets like it and take it in stride. But it also doesn't mean that this whole Greenland situation or these territorial ambitions or anything along those lines are over. Just if nothing else, it makes for a very interesting market and economic dynamic, and it also ties into Canada. We saw the response from Mark Carney, the Canadian Prime Minister, which makes things even more interesting because it gets into our trade talks as well and the whole Canada-U.S. relationship. But it's a wild market out there for sure, and one of the reasons that we manage the portfolio the way that we do is because it's a wild, unpredictable world.
Yeah, it definitely has been wild. Lots of headlines, lots of changes happening in the market, and that's why the tactical shifts that we've made towards offense, or going back to many periods where we've got more defensive for clients, have really stood out as outperformance, and really just helped to protect and preserve when there's heightened volatility out there. As it relates to the U.S. political scope, which has a big influence and increasing influence on markets. So there's midterms this year. I guess for investors, is there anything additional that you're considering, or anything that you're looking at as we approach fall of 2026 as it relates to kind of the U.S. political scope?
I mean, it maybe perhaps be optimistic. I just still have a hard time believing that any politician when they're trying to get reelected wants to crash the market. It doesn't put it out of the scope of possibility. It could certainly happen. There's so many unknowns. It's a very unpredictable world here. So who knows what's going to happen? But we've seen markets hold and continue to show strength, and what we've looked to do is just capitalize and take advantage and try to make some hay while the sun's been shining over here at Aretec, and that's been good. So I mean, what we do is we really try to watch what the market is telling us, what market participants are saying. I tend to think that the market is a much better judge, where you have investors really putting their money where their mouth is, and putting their bets on where the risk is lying. So not so much about what politicians are saying, because there's so much noise, not what the headlines are saying, but look at how investors and markets are actually responding and reacting to things. Because when huge institutional investors, when Wall Street, Bay Street, the whole global economic complex doesn't like things, they're gonna talk with their money, and they're gonna start pulling their money out of markets and moving out of certain areas. That's why you've seen the gold trade surge so much over the last couple years, and we've been big beneficiaries of that at Aretec, which has been great for us and for our clients. But every time Trump opens his mouth, gold prices keep going up. And it's because it's creating, there's a loss of confidence in the US dollar, US treasuries, heightened geopolitical uncertainty, political uncertainty, all those things. Is money just keeps flowing into gold, and it's not just retail investors and your regular retirement accounts. This is huge institutional investors buying gold and seeing it as an alternative source of assets. It's hedge funds doing that. It's central banks as well. It's other countries are doing that and piling up and building up gold reserves because there's less confidence. So just the environment that we're in is good for that. I mean, another good example of just positioning with all this political, geopolitical, just global uncertainty. We've had a pretty healthy position through ETFs into aerospace and defense stocks, and so Carney said it this week too, is that we're in this new new reality, this new world order, and countries are having to secure their borders. There's massive spending, doubling the amount of money that's going into a country's budget into NATO. So why wouldn't you own these defense stocks, these security stocks? Yes, they're not maybe friendly. They're not your feel good, warm and fuzzy stocks, but this is where the money's going. This is where the world is going. Countries are strengthening their borders. There's increased nationalism, less globalism. So NATO is beefing up its budget. So massive amounts of money going into global defense, international defense. All these countries involved in aerospace, even areas like cybersecurity. So that's another area that we play that have played in, which is maybe not as friendly or optimistic, but we've seen great results for some of our positions like XAR and Shield, and we actually added to that recently with a little bit more aerospace and defense. Have had 50 to 100% gains since we entered them, and that's the same with gold positioning. So there's ways to navigate this world, navigate this market that are not necessarily as, let's just say, black and white as saying, okay, risk on equities, risk off, and that doesn't mean also that positions like aerospace and defense are immune from the markets. Not at all. They tend to be more cyclical names. They just have a big trend and tailwind behind them. And same with gold. Gold has been going up what seems like unchecked and in a straight line. But remember that gold, precious metals, very subject to volatility. That can change at any time. So the portfolio stays diversified and continues to be diversified. But that's the way that we manage this and protect this, is with our investment positioning, with our portfolio positioning, and with our strategy.
Yeah, it sounds like, a great summary is that there is heightened uncertainty out there, lots going on, lots in the headlines, but at the end of the day, with the tactical wealth portfolio and tactical strategy, we're finding those pockets, those areas of strength in the market between gold, aerospace and defense, some different materials. And, really, as you said, making hay while the sun shines. And then at the same time, Greg's laying on the beach while the sun shines. So it's sun's shining here at Aretec. And, we're constantly looking for different areas of strength and ultimately just making trades to move into those pockets.
Yeah, and look, a lot of chaos out there in the world, and we are working hard to be on the right side of that, and win for clients and not be on the wrong side of that. So it's been a good environment from an investment standpoint. At least it's been a nice start to 2026, really strong 2025, strong start to 2026. Really, since we made the move over to Aretec, the numbers have been phenomenal, which is awesome to see. And I think a lot of that just speaks to we've had more flexibility, just more ability to invest in a way that we feel is in the best interest of clients, is in the best interest of investors, can ultimately better manage the risk of the market, better take advantage of opportunities. So the transition and the move to Aretec has been a very successful one for us and the business, but more importantly for our clients, for investors. So of course, we want you to be wealthy. We want you making lots of money. We want to see your portfolio going in the right direction, which we've been seeing recently. We want you to feel wealthy. We want you to enjoy retirement, enjoy the good life. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. So we'll be back with everybody next week. Stay warm. I think it's supposed to be a polar vortex and some snow. So try to stay warm, and we'll be back with everybody next week.